What is going on? So this is another Saturday market breakdown in preparation for tomorrow, and as I've had a lot of freezer requests, I'm going to do a full breakdown on all of the pairs. So what we can see for the upcoming weeks is the DXY is at a very key area right now, but we are seeing short momentum in the market. How do we know that? Well, we can clearly see that we've had this push down, this accumulation, and we're continuing. Of course, we understand that the price doesn't have to come all the way down here to these levels. We understand that price can still come lower and make its way back up eventually to continue higher. But what we do need to take advantage of is the current positioning and the market conditions. And I think that's a very, very important thing to take into consideration when you are looking at taking positions. So what we can ultimately see is that DXY previously tapped into these areas here, which is an extremely important area because this is where price left the base, near missed it, and then came up, and then eventually came down, took out this area, and then it continued pushing lower and took out this little piece of liquidity here, which essentially was retesting this section here. It doesn't necessarily mean that price is going to completely reverse. We don't know that. We can only wait for time to tell. But what we do understand is that this is a very key area where we may potentially see price create great opportunity for us to take advantage of, or it may correct and become somewhat of a stall over a period of the next 2, 3, 4, 5, maybe even 8 weeks for us to then get involved for a better sell. But it doesn't mean we have to wait for those one trades. We can actually take a lot of trades within that and counter-relate trades. So if we go to the daily, what we can see here is on the daily, price then came down from this area here, which was responding to this overall larger area. When price came down, it gave us multiple opportunities to take advantage of. But now, looking at the current price action, we are looking at how can we take advantage of where we are right now. So what we have to understand is where we're positioned on the high time frame. So as we marked on, we were retesting this low all the way to the left, this section here. And we just need to see how price is responding. What we can see here is that price hasn't completely made any significant rejection. It did leave a near miss, came in, tapped into it now. And this current sequence to the downside isn't the cleanest. This is overall looking like a larger correction. However, we just need to wait patiently to see how can we take advantage of this, because if this is the correction to retest this area here to then sell off now and continue lower, then when we do look at it on the lower time frames, i.e. the H4, we can then see that from a pattern separation perspective, when we did retest this area here, we did create continuation, left a little bit of liquidity, we took that out, we sold off, small little correction, created this, and then we continued lower. So from looking at that, we can essentially see that there is price action to take advantage of on the lower time frames. However, it does come with a level of risk, just because we don't know for certain how price is going to be responding in the moment. So what we can do is use things like these structures to take advantage of. Some of them are higher risk and some of them are lower risk, but we just need to really understand how is price responding and how can we get in safely to then take it in a way that we don't leave too much percentage on the table. Now, what a lot of traders do, and I don't think it comes from a huge level of inexperience, I think it comes from a place of either ego, greed, or some psychological reason why they're rushing into the market. And I have also done that quite a lot, where previously I would see something like on the lower time frame, I would see something like this, and then I would be rushing in to get a sell, right? And it's not entirely wrong, it's just you have to understand that when you're looking at the higher time frame, it can do a lot of things at this point, which it did. It sold off a little bit, but then it came all the way back up, and then it sold off again, gave an entry here, an entry here. And for a lot of people, what they don't realize is when price is doing something like this, the best thing to do is wait. And it's very difficult in the moment when you're looking at the charts every single day, looking for a trade every single day. And what you're doing is you're opening yourself up to more risk. And the risk that you open yourself up to is taking an unnecessary trade when you don't need to. What you actually need to be thinking about is, has price done enough to dictate a sell or a buy so that I can then get to the next point? And you're basically playing it from point A to, call it point B down here, right? And that's the gameplay that we're looking at here. Why? Because we have context. When we go back to the higher time frame, as we saw, we were retesting this level here, right? This whole section here was being retested. It then responded, and then we could see here that it created deliberate price action, which was repeatable, that we can take advantage of multiple times, and then gave us a few entries. Even as we saw with the retest of that over here, we saw the retest of this over here in the exact same way, and then it sold off, and then did very typical price action, because then what happened was it tapped into this area, started coming back up, creating the illusion, right? It's an illusion that price is now reversing, and then you're trying to get involved because either you're too zoomed in and you're not seeing the bigger picture. And it does happen to a lot of people. Even experienced traders sometimes get caught out on this. But the difference between an experienced trader and a trader who has been in the game long enough understands when they need to take a step back and wait for price to develop and become a little bit more clear, and when to become more aggressive and when to be patient, when to preserve their capital and when to be taking positions, because the markets are now showing very, very clear market direction. So in this sort of episode today, we're going to be going through all of the pairs, but I'm going to try throw in a few little key lessons that I've learned over the years in here as well, so that it can kind of give you something to walk away with today. And if you have any questions, drop a comment in as well, because I'll be more than happy to kind of elaborate on anything that perhaps I went over and I didn't give enough detail on it, or just anything in general. I'll be more than happy to kind of make a separate video throughout the week, just answering those questions. So yeah, ask as many questions as you want. I'm more than happy to get back to you. So what we're looking at here on the DXY is obviously now we've tapped into this area here. We don't know for certain what price is going to do. Price can still mess about and then sell off, which again is a strong possibility, but it doesn't mean we should just be taking the trade here, because at the same time we're sitting on this low. So the more it fails to commit, the more reason it has to say this is where the base is, and then price can come up, come down, tag that out, and then just push up higher. So again, we don't want to be trading in this territory. Really and truly, this could be very risky and very difficult. However, if we do get something like this, where price does fall and it comes back up and creates something a little bit more deliberate, then we can actually see that and take that as its own little bit of price, and then we can take advantage of something like this to then go short, because then we understand from a higher time frame perspective. When I go back to the 4 hour, it's very deliberate, and it's actually showing that price is building, accumulating liquidity, volume, orders in this area to then commit to the downside. So then it's catching people out thinking that price is going to go long, but it's actually stalling and potentially going short. Now, even with that in place, we still need to understand the overall positioning. Something like this can still not play out, and that's something that a lot of traders need to realize as well, is that even if we get something like this over here, or if we get something like this, it's a little bit more deliberate. That's something we can work with. Whereas if we're taking an entry where we've literally just kind of done this and rejected, if you take an entry here and stop loss above, you're not entirely wrong, but you have to understand again that price can just do that and push up higher, and then price is up here and gives continuation and goes. And then what you end up seeing is that this was the deliberate price action, but within here you might have taken a few losses because you were sitting looking at the charts for maybe even 2 days, and within those 2 days you took 3% loss. So when a trade like this shaped up, you situationally may not have been in the position to take that because you might have thought it was too risky or messy, and then you missed the actual overall move. So again, we have to wait patiently for price to basically just show us what we need to see. So again, it doesn't have to be that large, but we need to see that deliberacy in the market, because we could still get something like that and it drops off, and then it's down here and it gives us continuation down here where we can take advantage of that. That is something I'll be more inclined for because it's very deliberate. It's basically showing me that price is committing, and even though we have a bit of this, it's basically showing that we're responding with this channel, but we're still channeling to the downside, and we can still take advantage of it and still manage it to the downside. So again, I do believe that if you are looking at taking a trade for the long here, you just need to be a bit more patient. I would say wait for price to clear all of this area here, let it do whatever it needs to do in this area here, and then if price starts coming back up to these areas and starts giving you deliberate price action, take advantage of that and then trade it into these areas, this area here, and then at least you can manage it from this point here to the next point, and you might even be able to get in a bit more aggressive, even with, call it 37 pips. Of course, the market's not going to probably give you a large stop like that if it's going to be moving, but you know, if we just use it as an example, what we can see here is that even to the first point here, you're looking at 5.6, 5.5 at least, and then you're looking at that point there where it goes to 10%. And that could be the difference between you actually passing your funding assessment or you actually just getting yourself out of significant drawdown. So bear that in mind, that it's not always about trying to catch these very small intricate moves, because what happens a lot of the time is we end up trying to catch these small intricate moves and then we end up setting ourselves further back. And by all means, you know, if that's happened to you, you know, definitely drop a comment below and be open about it, because I think the more and more people realize that a lot of the losing traders who are making the same mistake are making the same mistakes, they start to realize that, hang on a second, if we're all losing money and we're all making the same mistake, then we shouldn't be doing this particular mistake. So it's very good to have that sort of certain circle around you to kind of make that better understanding for you to understand that if I'm taking trades in here, I have to understand the risk that it comes in with, because I could take that and then let's say for whatever reason you take the trade here, stop loss here, and then what happens is price does that and then just comes back down, tags you out, and then goes, and then you're looking at yourself like, oh, I thought the trade was great, what did I do wrong? Well, in theory, you didn't do anything wrong. It just came with the territory, and you had to understand that there was a possibility price could respond to this area, or even it could have responded a little bit sooner, maybe even to that area before it went higher. And then as a side effect of that, you start creating self-doubt. And then when you go into a doubtful mindset, you start to question your edge. And for most people who haven't really built a strong enough edge and a full understanding of what they're actually doing, they end up start doubting and taking trades outside of their plan, and then they spiral into something else, which then opens up to new problems. So you want to have a consistent, repeatable process, a trading plan that kind of plays on your strengths. And again, something like this, where if I just mark that up and we waited for price to do whatever it had to do in this area and then eventually came up here, you understand that I have an advantage in this area, so I could avoid taking any losses in that area. Even if there was a great trade and I missed it, there's still going to be more. I could then take an advantage of doing that, being patient, not having to take a trade in there, because I understand that price could mess about. Take a trade here, and then at least I can play it to there, even if it's a 3.9, or even if I've got time, let's say it's a 5 to 1 for argument's sake, and then it goes up higher, and then it ends up becoming, you know, a 10 to 1 as well. So, and that's on the 4 hour alone. So keeping that in mind, we just want to understand that we don't always necessarily need to be getting something so sharp in these areas, because in fact they could look appealing and they do play out sometimes, but a lot of the time it can cause a lot of risk, a lot of emotions and self-doubt, and you don't really want that in your trading. So if you want to mitigate against it, you can just do something so simple and just draw a line in the sand on and look for the trade outside of that, so that you know that anything that you're looking at for the shorts would be within here. When it's less invalidated, you can start looking for the longs, and then that's where you want to really be getting involved. And that's where a good level of patience comes involved. So looking at the DXY, it works both ways now. So what we're really looking at over here is we're looking for price to either break above here, give us continuation, or break lower and give us continuation in those areas. And I think if we get that, we'll be good to go. So very plain and simple, this is a no-go. Anything below, perfect, happy as day. Anything above, happy as day as well. All right, these are the two areas I want to be getting involved. I would personally prefer risk entry, but in some situations I would opt in for a insurance entry. And the reason why I wait for an insurance entry is because there's subjectivity to it. I'm not fully sure, and I have a bit of, not self-doubt, but it's not high up in the run. It's not giving me high probability position. It's not positioned up here, or it's not cleared that and it's not positioned here. So for those reasons, because it's sitting on the low, I want to wait for a little bit more to just give me that extra bit of confirmation. And I'm happy to accept, because this is a part of it as well, I'm happy to accept that I might not get the trade and it might just go without me. And if it does, it is what it is. But by completely committing and submitting yourself to your trading plan and understanding that in the long run, this edge will help you make money, and you will make money as a side effect because you're now the type of person that is not too selective but knows what they're looking for. You're going to be able to come out on top. So that's basically a little mini lesson on the DXY, and we'll go into the next one. So I've already marked up the charts here to save a lot of time as well, so we can go into it. So as always, we'll go to the higher time frame. What we can see here on the daily is that, and the weekly actually, more importantly, what we can see here on the weekly is that price is not really positioned very well. I'll be honest with you, it's very corrective. We're in the middle of all of this mess. We have this sharp sell-off, price is correctively moving. It's left a bit of a pattern here where it's kind of done an override, sold off, kind of come back, not really met that area, took out a lot of liquidity and then kind of sold off, and that was still more corrective. Made a sharp sell-off, tapped into those lows, pushed back up. You can see it's kind of up and down, up and down. As we go into the next point where we're looking at the daily chart, we can see here that we had this squeeze, tapped into that liquidity, borderline just tapped into it, sold off, had a decent entry within these areas, and then we're selling off now. So that's on the daily alone. So now as we get to the 4 hour, we saw the picture from the higher time frame perspective, and we could see that price accumulated, sold off correctively, tapped into these areas, and then started selling off. There was a little trade in here as well last week, which I was shadowing as well. So again, it only made sense because it was through this low. So I was more than happy to kind of take that as a risk entry there. But also at the same time, when I looked at it on the 15, there was two ways. I was either gonna take the trade here on that close of candle there, and then I was gonna go here. But then when I sized it up, I was like, okay, well, this is gonna be basically a 2-point-something% position, but I get the best protection. So the question here was, am I looking for the best protection, or am I trying to just get in and out of the market but get better protection by being able to move to break even sooner and not have to sit through the turmoil? So when I went back to the 1 hour quickly, what I could see here is that structurally, you can see that we had that little liquidity point. We had a little middle section here. Not a big fan of this little low here, but it was what it was. And then it came up and then had that nice little rejection there. At that point there, that aligned with the 15-minute, so it was kind of like an added part to it. I just wanted to make sure that if I was taking this, I could manage it into about that section where it kind of closed now, and I could get to break even. And again, if we go back to the 15, what we can see here is that price did channel within that area. Don't really need to see this one anymore, but we can see here price did this, came up into that area and then started to reject. And the nice thing is, as I said before, the line in the sand, it was basically there, and we could see that this little bit of price action where the 1 hour closed as well was through it, was basically below it, and it closed quite heavy body, which is a key point. So then I go to the 5 minute, which is a little bit more advanced for a lot of people. We could then see there was the break off that low and a bit of accumulation here. Again, it was borderline through, but it was below, and I could then take that as the trade, so setting it here and stop loss. I went for a little bit extra because really and truly I could have gone 10 here, but then I thought, why not just protect myself a little bit more? And I went around about 12, and then I shadowed that. And then this was a case where I just walked away. I really and truly, I didn't even look at the charts until today. I put it on the charts, left it, and I come to that level of realization where, you know, sometimes you have to let your edge play out as well. If you start trying to get too aggressive and start playing with it too much, you could essentially just close the trade off too early, make an emotional decision based upon something that's happening in your life, and these things happen. So what I did there was I basically had it there, and then after a couple hours I would have pretty much moved it to break even as we started to commit on the next 1 hour, which was here. And then as that 1 hour dropped, it was basically borderline down here for about 1.7. Really and truly, I would have just moved to break even or locked in a tiny bit of profit and just left it there, and the trade would still be running right now. So that was basically the trade in itself. That's about 2-point-something%. You can see to the bottom there, it's about 2.7, and then we're looking at the 4.5% trade there, and just see how it responds. So again, you can see that this trade is further in the run, but there was context for it to move, and that was the advantage of taking this position. Now, this isn't the best position in the world because it can still mess about with us. So this is another reason why I would be a bit cautious with this and probably just lock in about 0.5 at that point there. And then if price does mess about and does this, does something like that and then comes down, then I understand that, this could just be something a part of a larger piece of structure. And then I could probably get involved within this leg here if we do start to see a follow through. So again, this is something that just you have to realize as well, like you might have something nice like that, but this can still develop into something else because it is far further in the run. And if it does that, you can't really be upset with it because it is what it is. So you have to come to the realization that price action responds however price action responds, but we could have mitigated against that if we forecasted it properly. So again, the reason why we're locking in there is because of that. We understand that if market just opens and it starts to come back up, then we're not taking a break even or even potentially even a loss for some people, but we're really looking at just at least taking something away and being like, okay, well, it wasn't the complete trade that we were looking at, but the trade was still good, still valid, met the criteria, met the plan. There was more than enough in this area for me to take the trade. It was great, it was a great trade. It just happened to not be the one within my sequence of my trading plan. A lot of the time this trade could just completely sell off, be down here, and then some point on Monday, I'm looking at a trade which is already running, 4.5-ish, and I'll be out the market. Simple. If this continues to drop off for whatever reason, then, it is what it is, but I'm not going to be banking on that trade. I'm going to be looking to exit the market around about, probably not even borderline at 4.5. I'll be leaving it at 4. And I'm happy with that. That was a decent trade for me to get in and out the market, 4%, stack the win, and take the next one. So that's basically it for Aussie CAD. I wouldn't be looking for any trade right now. The only trade that I would really be looking at is, and it's interesting because you have to keep that neutral perspective, is that if I did get taken out and price did do something like this, and then it came back up, and then it sold and gave me an entry here, this is where I'd be looking to get involved in these areas. I'll be looking to take the trade right there, and that would be my trade. And then I'd look to take that to the next low, and then again that would be a 3.9%, so I'd be still walking away with a very similar profit. But then at the same time, with a trade like that, I can then say, well, that makes a lot of sense because internally it's kind of a bit more of an expanding at that point there, where it's kind of done this, it's done that, it's given it more of a reason to get to the low. It looks a lot better. That's a much better trade. And then I can size this up and use this little tool here, where let's say I just measure that leg there, take that, put it there, and that makes sense. So these are the sort of ways that I'm thinking and looking at the charts, and I'm not just trying to take one trade and hope for the best. And this keeps me from over position sizing as well, by looking at the variations of price action and just understanding that I'm not just trading with absolutes, I'm trading with possibilities, and I'm looking at things. What's probable? The scenario is probable it could sell off, right? It's possible, but what's probable is we develop, we then take out the orders in this area, we push back in, give us a clear entry, insurance entry, I can get in a bit tight, and I can walk away with a decent amount of profit on that. And I could refine that as well, which is even nicer. So, like I said, there's many different ways that you can think, but again, you should always keep that neutral mindset. Even if you're in a winning position right now, you have to look at the possibilities of what else could happen with price. So next one is Aussie Swiss. I'll be honest with you, Aussie Swiss, even though it's tapped into this area here, we don't know for certain what's going to happen. We don't know how price is going to respond. We don't know what price is going to do. Price can still mess about and do a lot of things. So if price then just does something like that, and then just messes about, comes lower, you don't want to be stuck in something like that, especially on Aussie CAD, because spreads can be wild, price action can be erratic, it can be very corrective at times. So I would wait personally, again, utilizing, like I said, the line in the sand, and I would just wait for price to really clear what it's really developing. And I would say that, okay, so price isn't retesting this because price has then come back up, it's come here, and it's given me some sort of continuation for me to actually take advantage of here. And with that in mind, I can then get positioned in here, stop loss below, so would ideally want to get better protection or something like this. And then I can look to play this to this high, see how it responds to these areas, and if it just continues going, gives me more entries, great. But I understand something, that price isn't always going to respond the way that you anticipate. This could turn into something completely different to what I'm looking at and mitigating against that. So then I have to look at the other pairs I have on watch, and then I have to see, is that really worth me having on my watch list? But even though it looks good and it could give me a 5-1 or whatever, is it really worth it? Because in comparison to some of the other pairs I'm seeing, they're positioned better, they're better pairs, they're more reliable. It's not currently moving in a sequence to the downside. So again, that sort of trade would have been decent, but where's it responding to? It's not really responding to anywhere significant. So then I have to understand it comes with the risk of the territory again. So moving on to the next one, Aussie Yen. I'll be honest with you, the yen pairs, they look promising, but I'll be honest with you, they're not as good as they could be. I'm personally waiting for price to do two things. And I'll go back to the daily for a second. I want to see price either come back down to these areas and then give me some sort of insurance entry in those areas to go higher, making something a bit like this. So then I can take advantage of this as a phase 1, phase 2, phase 3. I think that's a much better trade than trying to catch something in right now. And I know that needs a bit more development now. Obviously, I'm on the daily here, so we don't need to be necessarily thinking that, okay, we're trading into July, but then at the same time, we have to understand that we don't know again how slow or fast the market conditions can be. So during this whole period here, I need to be patient. And right now, we're nowhere to be seen down here for me to look for the long. But equally, I'm not looking for shorts right now. And if I was looking for shorts, it wouldn't be anywhere around here. The shorts would have to come into play up here somewhere. So I would have to see this then come up here, do something quite significant, and do something like that. But then this to kind of commit and drop. And then I'll be looking to then manage it into that low and see if it continues and comes into this low, gives us more continuation and continues. And it has more for a reason, because then this becomes one large structure of its own. So again, that's forecasting way ahead anyway. We're looking at some point in July, but being prepared for that is very important as well. And just subconsciously understanding that right now, even though you could be making up something like this and be like, oh, it's looking good, it's looking great. Well, you have to understand as well, like this could develop into so many things right now. We don't want to be getting into a pair that has loads of variables for what price needs to do. If price for whatever reason next week either shoots up, gives you continuation here, yeah, sure, you can look at something like that, but that's ideally that's not going to be next week. That's probably going to be, some point in the beginning of next month. Now we are coming to the end of the month in about 15 days, so in 2 weeks time a lot can change in the market. But again, it's just pointing that out, like it's unnecessary for me to be looking for a trade right now on Aussie Yen, and this also applies to a few other pairs. So if I'm writing it off, just understand it's because it's not developed, and me saying it's undeveloped is basically saying that it needs more time for it to then show its hand, so then I can take advantage of it. Again, Aussie US dollar, even though Aussie US dollar can show interesting price action on the lower time frames, this whole price action is a squeeze of accumulation of volume from a large purchase. You can see all that buying pressure, and then we're still moving to the upside, but we're accumulating volume. Now, understand this, the bigger players are positioned in these areas here, and they're sizing in here, but they can afford for price to come down before it goes up. Real question is, can you afford to survive that? And do you have the patience to? And if the quick answer is no, then you need to be more sharper to understand, okay, great, so I did miss all of this purchasing, and then all of this was so messy I couldn't really catch anything, or I made some small little trades here and here. Like, there was trades in it, but it's the territory of risk. So when I look at this closer, what you could be doing is you could say, okay, this is an expanding, this hasn't really tapped into the high there, but it took out this high here. Does it have reason to continue short? Well, I could start creating a reason and be like, well, we have this little bit of liquidity, it took it out, kind of came up here, didn't do nothing, and now it's creating this and it sells. I'll be honest with you, I think this would be more so of a trap, and I won't be looking for that incomplete. It's not wrong, it's not incorrect, but it could be an unnecessary in and out trade. So for me, this would be somewhat more high risk because of all the variables in there. But don't get me wrong, if you have it on watch and you're looking at this trade and you're looking to take it, don't let this put you off taking the trade, because really and truly, The trade idea is overall good. It's just when I go back and I look at the higher time frame again, I can then see that I'm trading within all of this price action here. I don't want to be taking trades within that right now. I want to be waiting for significant price action. I want to wait for price to tap into those areas, come back down, give me a trade here. And then even so within that, we're still within this, but at least it's taken out the high, significantly pushed in, and then it's then breaking to the downside and showing more follow through throughout. And then I could potentially see price actually moving to those lows. So that's the sequence I'm looking for. I'm looking for something like that. I'm not looking for something like this right now. I think something like this would be a bit forced. And when you do look at it from a perspective of pattern separation as well, you then look at it and realize that actually, hang on a second, we are kind of within this internal structure here, and price is taken out the low there and then it's pushed high. So whatever it's doing there could just be a part of the long move of an expansion to then fulfill this, to then play the, oops, what have I got here? Yeah. To then play this, and then we're basically looking at messy price action again, to then come back up to these areas, to then see a sell. So I hope you can understand why I'm going to be looking for shorts on this. It's mostly important to not get caught into unnecessary price action where if you don't need to, because again, when something like this shapes up, you're going to be much better off taking something like this, because there is less added risk, because you basically have done more than enough from a perspective of you've completed on this structure here, you've done an internal 1, 2, 3 as well, you've then taken out this level here and you've pushed back in with momentum, and then you look at it on the daily and you're like, okay, well, there was an area of volume there, we then took it out and then we sold. So I don't see any reason why this could sell off from here right now until we see something significant in these areas, and we're moving. So that's Aussie US dollar. Aussie New Zealand. Aussie New Zealand's an interesting one, but I know for a fact that this can be a very corrective and difficult pair to trade at times. At certain times it can be quite interesting, like here when we take out this liquidity and then we have a sequence like that. But in comparison to other sequences, we can see that they're not always the easiest to trade, and we do need to be a little bit more sharper now. When they do go, sometimes they give you phenomenal sequences, but sometimes, and a lot of the time, as I've noticed, it can be very messy and have a lot of wicks on it. So the best thing you can do with a pair like this, because I know there's a lot of people who struggle with pairs just like this, Aussie New Zealand, Euro New Zealand and so forth, is just keep on the high time frame for a while. Stay on the high time frame and really let it show its hand. Once it's kind of completed on a structure like this, you might then see something where price is now selling off, and then it's giving a lot of internal structures on the lower time frame. So I personally wouldn't really want to take anything lower than the 4 hour on Aussie New Zealand, only because of protection, spreads, and all of these things. I see that the strike rate for me would be somewhat better, because I can see the structure for what it is a lot more clearer, and I think that's a very important part. And then I can take advantage of something like that and then play it into the next point. I also understand that this isn't a sort of pair that I would keep in my portfolio for long term, for various reasons, but because the wicking, but more importantly, this is showing good signs of a sell. It's just I would want to see price come up and then push back in, and if we had something like that, I would then be looking for the short. And I think a short like that would be perfect in terms of taking on the 4 hour. So that's basically what I would be looking for on Aussie New Zealand. I wouldn't be looking for anything in there. Now, for a higher risk sort of trade, because we know that price, and a lot of the time a lot of people do this, is they'll forecast the price going back up here and then they'll wait for the sell, but they'll miss the trade that they're looking at to go long into that trade. So what we can see over here is that if price has already done more than enough to create this middle section and price is already responding to it, we don't have much reason to come back down unless it's just going to be a completely crazy corrective channel and it's just not going to respond at all, and then we'll get a clear message. But a lot of the time what we can be doing here is we can just establish that, okay, well, we know that we have a larger structure here, price has done some bit of a sell-off there, price then does that, comes back up, does this, and then it comes back down and then taps into these areas, and then we get an insurance entry and we can go long. you can take advantage of that. You can take full advantage of that, and you get better price action, and that patience pays off. So then you're basically seeing this as, this was one piece of its own, that was the bit of insurance entry that then gave you enough reason to manage into that high there. Oops, you can see it, this high here, and then, for example, you can then play the move to the upside, because we've basically done more than enough. So when you zoom out back to the 1 hour, you'll then see it as phase 1, phase 2, phase 3, and we're making our way to complete to that. And knowing this sort of pair, Aussie New Zealand, sometimes, you know, what happens is, even though you get something like this, it doesn't respond to it, just starts to continue and come back up, and then becomes more of an M star. And don't get me wrong, I think that the short is still on the table, but I think there's a possibility that that could happen. But I'm not going to keep that in my mind and be like, out of greed, do you know what, if price gets there, I'm going to be loose on my management, and I'm going to lock in like 1% or something like this. I'm going to be like, well, look, if I'm running 4.5% here, I'm going to take it. Even if price ends up pushing higher and goes for 8% or whatever, I don't care. I genuinely do not care. Why? Because I don't want to be sitting here for price to get here, start hovering, get a bit messy, and do something like this, and the next thing you know, I get taken out in this corrective price action, and then price continues higher, and then I'm looking at something like that, and then it's like, oh, well, hang on a second, what did I do wrong there? I had 4% wrong on the table, 4.5, and I let go. So again, stacking that small win, I can be in and out of this trade, I can walk away with a decent profit, get involved in the market safely. Maybe the trade could be a little bit better, a little bit tighter, risk entry, whatever. But again, I could manage it clearly into a significant point and then walk away. Again, I think a lot of the time, the decision making comes from the profit you can make. The decision making comes from an underlying belief that this could be the one trade that runs for 15% and gets me 5% out of drawdown, and then I hit my profit target. I'll be honest with you, if you keep thinking like that, you're not going to make any money. That's the truth, because a lot of people make that mistake. And yeah, if you go and speak to losing traders and you ask them like how often do you have that thought, what they'll tell you is they actually probably have that thought quite a lot. And again, you can see that as a common pattern with losing traders. A lot of them think alike, and that's in the mind. You know, they don't even openly say it; they just think about it. So again, what you want to be doing is you want to be doing the complete opposite thing. You want to be aware of it, but you don't want to be allowing that to be a part of your primary thought pattern. You want to be thinking in probabilities, in possibilities, in I understand that this could happen, but this is more logical, and this is going to be more sustainable, so I'm going to stick with this potential process. What we can see here on CAD-Gen, again, this looks much nicer for a long. Reason being is, even though we responded to this high, we actually then created a base here where we're then now responding to some sort of expanding here. You know, you could start drawing on loads of things and say, okay, well, we're also within a channel here, so this and this. But again, what we're seeing here is that price is now coming to take out that high. So if it's going to be taking out that high, the next question I want to ask myself is, can I manage it into that high? And is the high time frame supporting my trade thesis? And then when we look at it over here, even though we had a push down that's corrected there, it did create a double bottom base over here. So it did create a significant base, it pushed up and then retraced, created another base there, pushed up, and it's moving to the upside. Then if we establish the overall move, we can see it is corrective. So then we need to understand that if I do take this trade, is there a possibility it can come back down? And the real answer is yes. Why? Because this overall price action here is corrective. And because of that, we don't know for certain if price is going to be responding to these areas here and then come back down and then sell off. So obviously, if we're taking a trade, we want to be more sharper and understand that if I'm taking this trade, I need to be available to manage it appropriately, because price could move significantly in my direction, or price could move significantly but then reverse significantly fast, and then I end up leaving a lot of percentage on the table. And I think, again, you have to kind of think about not just your trade alone, but your week ahead before you're even taking these trades into consideration. If I know I'm going to have a busy week next week and I'm not going to have a lot of charting time, it's completely pointless for me to really start thinking, should I put this trade on watch? Because I understand that it's going to be somewhat high risk. I need to be available, I need to be sharp. It'll probably shape up during X amount of time on watch day, because it needs time to develop the structure. And if it does give you what you're looking for, you can then come to the conclusion that, okay, well, it might shape up around about Tuesday, Wednesday. I'm really going to be busy on those days. So I need to be aware that, okay, if it's going to shape up, it could be London, New York session. Can I be available those times? If the answer is no, then you can put it on soft watch or something and just be like, well, look, I'll set an alert just so that on the day, if it's shaping up, I can be there, I can take it. But then I have to also understand that if price goes, it's so close to the area where price can really just respond that I need to be able to manage it appropriately to break even and so forth, and not risk over managing it as well. So a trade like this, I would more so be interested in taking it more on the larger stop loss protection side of things. But then when I do look at it closer, it's like, well, I've got about 1.8 into there, and then open the floodgates to the upside. We're then looking at price just continuing to rally. So for me, I think CAD Yen is a great pair. I think CAD Yen is a great pair to have on watch. It just requires a bit more for focus, but then also understanding that if you don't get the entry, it is what it is, and then we just wait patiently, and then when price is breaking up here, we can wait for something like that, and we can go to the upside with it over here, where it's basically retesting maybe this side here, or even breaks in a bit and comes back up, and then you get more entries, and then you can go. Again, like I said, because we're within this whole corrective price action, don't expect price to just move sharp and direct. It can mess about, it can do a lot of things. It can really play with your psychology as well. When price does something like this, sells off, and then comes back up, and then does something like that. And then next thing you know, you're like, oh man, why did I take a trade within all of this? Well, again, it came with the territory. You made the decision to put that pair on watch. So you have to understand that the current sequence and the market condition of this is currently corrective. So I understand that there's some variable risk in here, and I'm accepting those risks by putting that on watch. If you're deciding that you don't want to take those risks, then don't put it on watch. You can still study it on the side and you can shadow it, but you don't have to be jumping into it. So again, I'll be looking for something here personally, just because I would be sharp enough to wait for that. And if it does come in my time zone and whatever, then I can take full advantage of it. If it doesn't, I'll leave it. So that's basically it for CAD Yen. And we'll see how that develops. Am I certain that this is probably going to develop? I don't know, really, I'll be honest with you. I think this could just not give us the best entry, and it could do something completely wild and just kind of go. But again, if it does, I would be patient, because again, me saying it will go doesn't mean just take a trade if that happens. Because really and truly, what could happen, and these things do happen, is you look for a trade, you see this, and you're like, oh yeah, Canal said this, and then what happens is price does that, creates a base, comes back up, fails, then takes out that liquidity there, comes up, does this, and then you basically had like this sort of 1, 2, 3 section here, where price did something like that, and then you then see the trade, and you're like, oh man, I could have taken this trade. But what happened is you took crappy losses, you deviated from your trading plan, or you didn't have a proper plan in place, and you were unable to capitalize on the actual trade when it did shape up, because you let your greed and your impatience get the better of you. So then you missed the actual trade that you were looking for. CAD Swiss, I'll be honest with you, CAD Swiss not really entirely the worst pair in the world anymore. When I did start trading with Falcon, I did originally not like CAD Yen at all, and felt very skeptical about putting a watch. But you know, over the time, when it does tap into these areas, gives you continuation like that, I'll be honest with you, if it's deliberate and clear enough, it'll be something like this, and it could just be a phase 1, phase 2 into those areas, and then I'll just get out of the market, really and truly. The price coming into, I wouldn't even wait for it to get to complete high. I'd probably just get positioned in there, most likely wait for a clear candle. Perhaps maybe this would be a 4 hour. I'm not too sure, we'll have to wait and see. But I'd wait for a clear enough candle there, and then I'll just manage it into these areas. Even if it's a 3-to-1 into that, man, I'll take that. I'll take that and walk away, because really and truly, I don't want to be caught up in this particular pair, because as you can see, man, from time to time, it just, you know, it can be, it can just really play on your patience, man. I don't want to leave trades on unnecessarily if I don't have to. And I think that's a very key thing, because it just allows me to enjoy my life a bit more than having to constantly be trying to, look at these trades in and out. So Swiss yen, I'll be honest with you again, this kind of goes similar to CAD yen, but Swiss yen's just had a bit of a pump to the upside. Now that we're tapping into these areas, I don't really anticipate price to just continue rallying. I do anticipate a bit of a slowdown in the market, but again, this is just my thought on what I think I might see. But again, a lot of time I've been proven wrong. So I'm not gonna go into the market thinking that, price is gonna do something like that and all this stuff. Like, I don't know what price is gonna do. Nobody knows. And if you did know, you'd be super, super rich right now. So what we do know is that price has squeezed, and it's basically moved correctively up, then accumulated, created a bit of a correction there, moved up, and then we might get another correction, move up, another correction, move up, another correction, and it's just channeling to the upside like that. Something like that, I'll be for. I'm all for something like that, but again, in comparison to some of the other pairs I have on watch, then it comes down to conclusion. Do I really want to be taking a trade when it's kind of sitting in these sort of areas here? And the real answer is not really, I'll be honest with you. Even though it's so high up in the run and it has a lot of context, doesn't mean that you'd write off the trade. It's just because these significant highs are positioned here. If for whatever reason market does just sell off sharp, I have to be very sharp for that. And like I said, I'm not looking to get involved in a small trade like this and then hold it all the way up here, because I don't know how long that could take, and we know as we approach these areas it gets more and more tricky. So trade like that's still good. If you got it on watch, I don't blame you, it still looks good, but I would be waiting for something significant. I'd be more than happy to wait for a trade like this from these areas where we get something like that, or even if price rejected and then gave me something like that. Even with that, I understand that we haven't tapped into those areas there, but again, it's deliberate, it's consistent, and I can take advantage of something like that and see it as kind of like more for left shoulder, head, right shoulder, and so forth. But again, Swiss yen for me is just not really the go-to. If I show you on the 15-minute, what I was looking at was basically this, where if you did get something like that, you're not wrong. You're not wrong to take a trade like that. It's just where it's positioned. It's positioned on that low, on that high, and for that reason, I'm just not really interested in it, because it could just develop. That could come here, could come failed continuation, does this, sells off, comes here, and then eventually comes up higher, and then creates some sort of larger flag, and the next thing you know, this is actually a much larger accumulation for the next move to go higher, and then it starts to rally and move, and then you look back on that and you're like, oh yeah, that makes sense, right? So for those reasons, again, it's one of the reasons why I don't see this being a low risk trade. I see it being a high risk trade, and I would happily take a step away and just make that conscious decision to be like, I'm not going to put it on watch, because I open myself up to the risk of seeing a trade which could meet my plan, does look good, but the overall positioning is there. And if I slip up, and I understand that one of my habits, which isn't my habit, but if it was my habit of zooming in too much, I would forget this, and I would just isolate that, try to take the trade, take a loss, and who knows, that loss could actually spiral, or could be very unnecessary and keep me out of another trade that I could have taken. It could lead to so many things, so it's unnecessary for me to actually put that on watch. This one's great. I love this, because what we have here is we have a section here where liquidity was basically retesting all of this. We had this 1, 2, 3, it was corrective, and here's a middle section, came up, and now essentially we're basically seeing price now push down, but it can still mess about in this area before it goes. But what I like to see is if we can get deliberate price action here. If I just go to the 15, again, it doesn't have to be this large, but the line in the sand is basically this section here, and if we can trade through it, all of this section here, anything like that would be perfect. It would be more than enough for me. Anything here I'm not really interested in, I'll be honest with you, because it still could be a part of all of that, right? So I don't want to be getting part, I don't want to be taking those unnecessary trades. I want to wait for something which is so deliberate and clear that if we got something like that, I understand that that doesn't really look like the trade, and if it is, for whatever reason, then I would probably be able to take advantage of it later. But really and truly, that's a much nicer trade for me. Even better if this was positioned lower. If that was positioned there, that increases the probability even more, and I'll be more inclined to want to take that trade, because it's now basically invalidated that long, and it's now just showing a follow through to the downside. So a trade like that can then present a much better trade, and then I'll be able to manage that. As you can see, there's not a lot to the left, so I can manage that clearly into that point there, and that's a 6.6%, which again, I would have no problem with just leaving that trade on and let it develop and continue, give me more sequence, more trades. I might be able to scale into it 2-3 times, and for that reason it's a great trade. So that's basically what I'll be looking at for Euro Aussie. I actually really like Euro Aussie. It looks great. EuroCAD. Look, EuroCAD is nice, man. EuroCAD, same situation, but you know what's nice about EuroCAD? If you look at it here, I'll go back to the daily. If you look at it here, you can see that even though price hasn't yet tapped into those high value areas that we've been missing, over here we've got all these areas here, got this override section here, prices then come in, phase one, corrective, pushed up. There's still some potential in here where we could be looking at price action to then come into these lows, because it's left a little bit of a footprint, tap into these lows before we go high. So I'm interested to see how price is going to respond here, but I also understand that this could all be one piece of its own, and then also this then just does this, and then you're looking at it like, wow, that was really messy. But for me, that's very unlikely right now. Why? Because what we're seeing with price action is price has pushed down. It's given us a bit of liquidity in the market here on the sell. It broke the low, started accumulating volume, spiked up, took out the liquidity there, pushed back in, and now giving continuation to continue. I like that a lot. Why? Because this is a phase one, phase two, phase three. One of the reasons why I think this could be a great trade. Again, it's another trade where I'm not looking at the greedy side of the trade. I'm looking at just getting in the trade and stacking the win. There could be a lot of potential, yeah, sure. This could drop off for 10%, but I'm not looking at a 10% trade. I'm looking at it over here in these regions where I'm more than happy to walk away with 3.5% on this trade, because I understand that this isn't my typical sequence. It's messy, there's a miss to the top, this can mess about, this can do a lot of things. I don't want to be sitting in this psychologically, just managing my stops, moving them up and down, spreads come in, news comes out, next thing you know I've taken a break even, this and that, and I'm sitting there like, oh man, I could have walked away with profit. Well, I'd be more than happy to walk away, take the win, and then look for another trade. And developing that patience and understanding that, look how many trades we can forecast week on week, yet we fail to make profit every week and week. And why is that? It's because we're either being not too selective, or we're taking everything, and we're taking things that shouldn't even be taken. So again, just pointing that out again, and just to point out, this is a 34 pip stop loss. I might even be able to get in a bit more aggressive. I'm not too sure just yet, but even with that in place, I could probably get away with a little bit tighter. And then, what I was looking at, 3% could be 6%. So just pointing those bits out, that it's not always about, and you can see the line in the sand I was talking about again here, and even though that trade played out, you can see the risks because it was sitting on the low. But now that we've broken that low and we're accumulating, if you get something like that, and that's there's no reason why I wouldn't want to take that, because from a perspective of just overall this whole section here, taking out all of this orders, pushing back down, getting a better price, and then moving back up, it's all there, man. It's everything I need is there. So I'm more than happy with that. The next pair I'm going to be looking at is Euro GBP. So Euro GBP is kind of similar, but it's not the same. Reason being is, we can see here from a pattern separation perspective, liquidity was here. We've kind of near missed it in that section there, but we did have all of these little sections here that it took out. It then dramatically sold off, but now it's pulling back. And for that reason, the reason why I'm not really too excited about this pair is because overall, this whole time, it's basically been accumulating. So this can go at any point. It doesn't have to come back down here before it goes. No, there's no rule that says that. And right now it has more than enough volume for people to just buy, you know what, okay, let's just buy now. And it pushes price higher. And then next thing you know is price makes its way all the way back up here, and you were too busy waiting for the short there. So that's one of the reasons why personally I'm happy to stay clear of this pair, because of this overall range. Now, this doesn't mean that you can't take trades on it. It doesn't mean that at all. What it does mean is that if you are taking trades, you need to be on the management with this, because you understand the higher time frame well enough that if you do take a trade on this and price does decide to sharply pull back against you, you're not going to be surprised and sit there upset because you missed something in the market. So the next thing I want to kind of just point out here now is that we've got this, and now we have to isolate it, right? And if price is going to go, price can go with a near miss at the top. That's completely fine. But what we really want to see here is that what's happening. So price did create a near miss, yes, but it took out loads of highs as we saw before, right? It took out all those highs. Price then broke this, created this, right? Gave multiple little entries in there as well, created this, and then it sold off, and it just didn't continue, and it left a gap to those areas to the low there, and then below it as well. So clearing that off for a second, what else do we notice? We notice that price was corrective as well, right? But it wasn't entirely corrective in the sense that it was like that. It was more so very directional, and it had structure to it. Now what we can see here is that price had this low here, created this little bit of liquidity, and it retested it. Great. So when we look at it, did this technically come back up to tap into this area and then sell, or did this come back up because it's going to be a reversal? How do we know? Well, we know because of how price has responded, and that's the key, right? The response. That is signifying that this was the target zone. And obviously, sometimes we can get it wrong. We don't know for definite, but what we do know here is that if I go to the 15-minute and I can see price has then done some sort of corrective price action, it's doing this. If this isn't going to be the one, it has no reason to come down and give me this trade. It has absolutely no reason. What it would be doing then is probably come sharp, no entry, and then come sharp back up, and then do this, and then it creates something like that, and then you get a trade to go long, and then that's your long trade. And then you're basically taking that, understanding that you are basically trading with that low, but this is accumulated volume giving you a signal, and you can manage it from here into that point there, and then basically just see it potentially go up or take you back for a break even. So a trade like that, I think, is great. Has a lot of context, has a lot of work to it for the long, but then now we look at it for the short, right? And the short is, the only reason I'm putting this on board is because it's more so available, right? And this is a tricky one, because the trade's available doesn't mean we have to take it, but when it has a lot of context behind it, it makes a lot of sense for us to then take advantage of something like it. So then I go to the EG on the 15, and I see that's my line in the sand. If I get a trade there, I can take that. Now, I also understand that this is high risk, because I understand that with the gaps, price is actually moving to the upside, the sequence is still corrective. If I go to the 1 hour, it's kind of trickling and squeezing, so price could just continue moving in that motion. Then I go to the 4 hour, and I'm like, okay, hang on a second, what do we have here? Well, we had the liquidity, we had the response, and now we're selling off. And then I go to the daily, and then I look at the daily, and then I'm like, oh, okay. Now, this is a question where we didn't really get the best daily candle. It didn't give me a strong rejection. The daily showing more of a bullish move here, because we basically failed to create continuation here, and then we pushed higher. So I want to see something clear as day. So if I go back to the 4 hour, I can then see that price is trickling and squeezing, and if we do push, we come down, we get an entry over here. I could probably take that, make sure I can manage it into those lows, and then I can then see that through. And then if we get another one here, I can then take that and manage it into the next area. And then if we get another one here for whatever reason like that, I can then take it here or within here or whatever and manage it into the next low. And then that would be basically the sequence of trades that I'm looking at. And that's basically, in a nutshell, how I'm going to be looking to take advantage of things like this and on multiple pairs, because it has context and reason. But remember, between all of those trades, the higher time frame, not to keep you out of the trade, but to understand that if you're in drawdown and you're in a bad place right now, situationally, it doesn't make sense for you to be taking that trade, because again, if we look at something like this can still come back up, come back down, and then give you some trades later at a different stage, and then just kind of sell off. And then what happened was you were looking for trades in here, you took a loss, and then took another loss. Oh, sorry, not those ones, sorry. But you took a loss in here, price came back up, took a risk entry in there, you took a loss, it messed about, and then next thing you know, this became a failed continuation, and then that was the trade that you should have taken, and then that was to go there. Sometimes you do need to take a loss to understand that you might be on the wrong side of the market, but again, you can see how patience can be an advantage. And going into putting this pair on watch, I understand that I might need to be patient. I understand that this could then develop into this, it could do that, take some time, and then eventually, even when it comes down here, it could sell off and then give me a trade there, and then that's the trade that I'm waiting for. Or this comes up, gives me insurance entry, and then that's the trade I'm waiting for to go long. So you can see again how applying the insurance entry, or just basically being patient even at the areas where you want to get involved in the markets, can actually save you a loss and actually reward you with a really good win. So taking that in mind, moving on to EJ. I'm actually going pretty slow on these, aren't I? So EJ, I'll be honest with you, it's okay. I mean, again, this is the same situation we saw with CJ and so forth. This one, I've just said, if it goes up, comes back in, gives me that entry through the line in the sand there, I'm going to be looking at the short. So most likely, we might not see this. It might just be further down here, and that's the trade down there. It is what it is. We just have to be more patient again. But even though we have all of that, this could just create continuation, move higher, and then we get continuation up here. And where we might have been looking for the long, we end up looking for the buy, and then we get in long to the buy to the upside. So very similar to the other yen pairs we were looking at. Wouldn't be jumping into anything too quickly on the lower time frames either. Euro USD, exact same as the DXY as I was saying, but really and truly what we can see here on the daily is that price has a phase 1, phase 2, phase 3, and it's basically moving to the upside. Now, this isn't the most significant ray line. Obviously, I'm just mapping on areas where price could potentially mess about, correct, do some sort of pullback, and I want to be able to protect my capital smart, not just waiting for the highest value area possible. So what I am waiting for here is that understanding that this was one piece of its own little correction, then it started correcting higher, and then we tapped into this area, and now we're sitting on it. A lot of people will be anticipating shorts, which is not wrong. If I got a short, I would either wait for the short here so that I can manage it into that area there, and if not, then I'll wait for something a little bit larger and then make sure I can manage it into that point, or potentially even down there. So that's basically how I'm looking at it for EU. But for the long, through the high, I'm going to be playing it like this, where I can essentially see this as its own little piece of isolated structure, and that's a little liquidity point, that's a near miss. Price comes up, maybe even breaks the high, creates a little bit of an expansion, pushes back down, taps into that, takes out liquidity, pushes back up, gives me an insurance entry, and we go long. And that would basically be my game plan for the long. Obviously, I'm not worried about this trade entirely. I mean, obviously, if it goes, it's messy, it is what it is. There's going to be plenty more trades, and I think accepting that is another thing. Here's another example of a trade that I think a lot of people may have zoomed in and probably taken some sort of unnecessary loss. And I'll tell you why this is wrong, because this is poor pattern separation, right? Sometimes when you're evolving your structures, you can evolve them incorrectly, and there's clues to it, like the middle section and so forth. But what you do need to understand is that as you improve as a trader, you start to realize that the pattern separation is what really helps you a lot. So if we just mark this on, let's say that's the low, right? That was the failed continuation. Price came back in, retested it. That was one piece of its own, so you could have taken advantage of it. there's commonalities within all of these little structures that can teach you where and when you can get positioned really well. Again, you can see price then created its next, came in, retested it, failed to continue there, didn't tap into anything significant, then trickled lower, retested it, came up, gave us small continuation, and then went higher, came back up, and then what happened was it came in and took that little bit of liquidity out again within there. Yeah, sure, there was some trades, but it is what it is. Did that tap into something significant? Yeah, absolutely. It took out all of this, failed, gave continuation, failed, continuation, V-shape again, and then sold, another continuation below the low there. So you can't be arguing that there's not going to be more trades, because there's trades everywhere. Then you can see that once price responded from there, gave a small correction there, another one there, and then pushed up higher. Didn't take out the high just yet, came down, did this. This wasn't really anything. There was no real solid trade in there. It would have, anything in there would have been somewhat high risk, because it wasn't a fully developed structure according to my plan. And then you would have basically looked at that as the low, that as an expansion. We didn't quite come in and tap that low. So then when you look at it, it was just kind of like an override to that section there. And then it went, gave you this, which then arguably you could have said, well, maybe this is this, and it's going to continue coming, and then it's going to go. It is what it is. Sometimes you have to let a trade go. So when you look at it like that, there was that, and then it was basically higher risk. The trade went, and then we tapped into that high there, small correction, went up, and then we eventually broke the high. And that's where we are now. So obviously, as you can see, how do we know that this is one piece of its own? Well, that was one piece of its own, that had its own context to it, that had structure within it. Then it did this. This was the leg higher, as we saw the leg higher, created its own piece of structure. That became one piece of its own. You can see all of these ones were its own piece of price action, and then they all did something significant. Like, even though that was the structure, that push lower to retest the previous structure is still part of the structure. It's just a part of the psychology of the structure, understanding that why certain things are happening. So again, now that we understand that that section up there is its own piece of structure, we can then say, okay, great, so now with the pattern separation in place and we fully understand, and I did all of this on the 1 hour, by the way. You can see how I didn't even have to go to any lower time frame. It was more than enough for me to then read the price action, to then take full advantage of the current price action positioning. So where people could argue the market conditions have been quite difficult and so forth, in reality, your pattern separation wasn't sharp enough, and because of that, you ended up not getting into optimal entries. So what we can see over here is that liquidity point, and again, in some situations like here, we understand that price might not get there, it might override, it might respond from this point. How can I mitigate against that? Well, simple, and I'll just point that out again. Let's say we were waiting for this area, price had that, it responded to this. How would we mitigate against it? Well, wait for insurance entry. We can see that we had this, and then we had that, we missed it, right? It's fine. Well, it happens, right? These things consistently happen time and time again. We had a trade there, which we could have taken advantage of. I think a lot of the time, one of the biggest problems that I faced previously, and I know quite a lot of other people face, because I get asked this question a lot, is how do I know that this is going to be the trade to go? How do I know that's going to be the trade to go and it's not a part of this and that? Well, the truth is you don't always know, because it's not so easy to read. So you make a conscious decision to stay out the market. And you consciously say, it's okay, I'm more than happy to not get involved in this position, because if it plays out great, thesis can be great, this and that. Well, I'm not going to change the way I'm trading based upon what the market is showing me right now because it looks good. Like, so many times people deviate from their trading plan because the market's a bit messy. So they might see something like this and they're like, well, we have this, it's more likely this is going to sell, so I'll take that little trade there. You're not wrong, but then at the same time, you can't be upset that price did that, because then when you zoom out and you look at it on the high time frame, it's like, well, we're in a phase 1, phase 2, phase 3 back into this area here. This isn't the overall highest value area. We still have points above. So am I upset if price is going to move higher? Well, not really, because I understand the dominant direction of the overall market is moving to the upside. So I can't catch every pivot to the up and down. Like, I have to just take that loss and realize that I need to learn from that. So again, I'll move on to the next one because we're still on the Euro pairs. Euro New Zealand. Okay, so I'll be honest with you, Euro New Zealand for me is not completely ready at all. I'll be honest, it needs to get to these areas before I wait for anything significant. Now, it could just mess about, it could do loads of things in these areas, could even do this for a while before we see some sort of significant drop off, right? And even at that point there, it could still do that. And the next thing you know, it's just become one massive crazy price. These things happen, that's trading, man. And the sooner you accept things like that, the sooner you'll realize that I don't need to get stuck into unnecessary price action and keep trying to hammer trades in. I'm going to wait for something which is systematical and repeatable. So if I get something like this, and then price does come back up, and it does that, and then eventually comes back in and gives me an entry there, I can get that. But I understand that that might not be ready till next month. So knowing that, do I need to be putting this pair on watch every week waiting for a trade? No, right? Do I need to be saying to myself, okay, what if I do this and that? There could be the possibility that this is not even to be considered, and price does this, gives me a trade here, and I can go short. Yeah, sure, you could do that, but again, that needs time to develop. So I understand that if I'm going to be looking for a short, I need to see something so significant like this, but still understand that if I take this trade, it can still make its way back up here at some point, and I might just take a trade there for it to then turn around and then get messy and then comes all the way back up. So where's the true value area for me is the point here, because it's missed that point a significant amount of times, and because it's consistently missing it, I don't see why I would want to be taking a trade anywhere between there until I get to the point which I'm most interested in, which is this point. So I'm going to wait for price to get here, however it gets there. I don't care how it gets there, I just care when it gets there. I understand that I need to be even more patient to see what happens, because price can get here and just continue moving. And I'm basically been having this pair on watch every week, being like, okay, when he gets there, I'm going to do this, I'm going to wait for the short, it's going to be the trade of the year, whatever, blah, blah, blah. It doesn't do it. And then how is that going to affect me mentally? So by me just being open to the possibility and understanding probabilities of price could go long, price could go short, it then saves me from using my energy and time from jumping to the lower time frames now and being like, okay, well, you know, if price does that, I could take the trade and go long. Nothing wrong with that at all. It's just, again, you know, price could just do this, could just do loads of things and then continue with higher. So I wouldn't make a forecast like that and put yourself off, but I wouldn't start going into the 15-minute and stuff and being like, okay, well, I'm gonna take a trade here now because I think that could be the trade, and then it just goes. Like I said, that's your sort of greed or something kicking in, where you're basically imposing a belief on the market, where you don't want to be doing that. You want to wait for the market to tell you what it's going to do. If the market does this, and then you then end up seeing it over here, and then you get insurance entry, great. Nothing wrong with that. You're supported by structure. It makes sense to then come up into that point, or even if you get an expanding to then be a reversal, makes sense, right? That would be much lower risk then, because you're supported by all of that. But right now, by taking a trade in these small little areas, you're opening yourself up to all of those variables. The variable of this being that, this then just being a massive messy pair. You know, these are the things that you need to think about. So I don't need to waste my time with a pair like that, because it's just going to cause me unnecessary stress, maybe unnecessary losses. It's cluttering up my system, where I could focus my energy and time on much better pairs than putting something on watch that doesn't really need to be there. So GA, again, GA is very similar, I'll be honest with you, but the nice thing about this is we've created a base here, we've had a strong push up, and now we're basically showing some signs of this sort of being a running channel. So what I'm looking at is taking advantage of what we have here. So I'm waiting for price to essentially just show its hand. If we start pushing up and we get continuation like that, that makes a lot of sense to me because I can probably manage it into those areas with a risk entry if it's good enough. And then I can basically see it as a clear target to the upside. But I also understand we're in a corrective channel and price could do this and then come back up, come down and do something like that. And then this becomes some sort of, middle section for an evolved channel. And then it's just basically like that. So again, another pair which can shape up and be nice, but can also come with an additional level of risk. So I need to be more on the management if I'm taking that pair. But I do like the context of GA much more than EM, to be honest, because it's moving to the same direction, but it has less of a reason to kind of mess about. But ultimately, I'm not looking to, let's say go full 1% risk on a trade like that, because of many variables like the positioning, the overall sequence, the pair itself, the running channel. Like a much better short would have been this, right? This would have been a much better short, right? Because what you can see is that you've had a strong push down, you've had accumulation, a response, and then I wouldn't have taken it as a risk entry, but what I would have done is, actually I don't even need to go to that time frame, I can just do it on there. You can see it here. What's so nice about this is you can see it responded to this and I was unsure about it, but then I had my line in the sand there, and then we had the response to the structure, and I could have taken it, maybe even on a refined entry over there. I could even take it as a reduced risk entry. Maybe you would have taken a break even there, but even if you did, you could have got repositioned there, because then you're looking at that. There's so many different ways you can take a trade, which is so creative and nice, but then at the same time, it's like, you don't have to take the entry here and take the risk of this then not being what you think it is and it taking you out, and then you end up taking a loss and then being wrong, where you could actually wait, let price show you its hand and then go with it. And again, like a lot of people, you don't need to be losing money, man. You could save yourself the loss. You need to let go of just trying to make so much in one day or so much on an account. You can just, like I said, let yourself let the market show you what you need to do. Okay, great, GCAD. Daily. We've responded to this area, push down. We are within a corrective sequence. So again, it's not a pair I'll be putting on watch, but we are correctively moving. As we move lower, we could see more and more continuations, but understanding that even if you had something very clean, 10 out of 10, look at the positioning, man. And the sequence, you could get the most cleanest setup over here, entry and so forth, but then this can just continue messing about, and then next thing you know, it's coming back up, and then it just evolves and becomes something way out of what you're looking for. So for that reason, I'm just not interested in this pair at all right now. Interesting to just see how it develops and how it plays, but I'm not interested. Like, let's say it taps into the value area there, it then pushes down, gives you continuation, leaves a bit of a liquidity point, sells off, gives another continuation, sells off, taps into the low, pushes back up, gives you an expansion, responds to a value area there, pushes down, gives you another insurance entry and sells. Context behind that, perfect. Again, push up, gives you this, all right, 1, 2, 3, then comes in, taps into the low of it, pushes up, then pushes up, fails, gives this mess, and then within there, it's like, subjective entries, there was no entry, and then it squeezes, doesn't really go nowhere, fails, it's still technically within that squeeze, because it's just evolving out of it now. A better trade would be a follow through, a sell, and a trade down here, and then we're looking at it to come back down. But then, again, we have to understand, when you start looking at it, you then have to start realizing, what is this going to become? Is this going to be a middle section? Because if it's going to be a middle section, it could be corrective. So we have to look at many different variations and understand the higher time frame perspective equally with the lower time frame perspective, and then basically put them together to come to a clear understanding of what we're going to really play with. And you can see how this, in comparison to some of the other pairs we analyzed, the other pairs are nicer. GBP Swiss, okay, I'll be honest with you, GBP Swiss is looking great, but the only thing I don't like about it right now is it's not ready, and it might need another week to really just show itself. And the reason being is, obviously we have this little wick to the low here that I'm not worried about at all right now, because it's moved away from it. We had the gap here, we took out the low, we responded, we pushed up, we had first continuation, push up, failed continuation, and now push down. Whereas if this is going to be something like that, again, probably not going to be that large, but who knows? We'll have to wait and see. So I think we do need to kind of wait with GBP Swiss, because again, these pairs like to really sell off. With the failed continuation in place right now, I have to ask myself, like, where was it going? And it didn't really tap into those areas. It left a bit of a near miss. It pushed back up, and it looks like it could be giving continuation here to continue. Fair enough, that's possible, but that could then eventually just do this. And next thing you know, it comes in, and you think it's going to be a reversal, and it could just continue a bit, and then it comes up, and then eventually starts to move. So again, I'm not going to stay out of the trade because of that, but I'm going to stay out of the trade because I want to see price actually tap into these areas, take out this low, come back up, and then give me something a bit more significant. And then when I've got trades like that, I can then play with something where I've seen it's responded to this, so that's now invalidated, it's now broken through that, and it's giving me this. That's where I want to be getting involved. Then play the long to the upside, and then see how that plays. And that's why, even if I had this, I would still not take it, because of the variables of, I don't know what's happening. This could then just do that. It could just really be messy. I want to mitigate against all of this, and I want to be taking that. I think that's a much better way for me to be keeping it low risk and avoiding that. Obviously, you know, if you're feeling the high risk appetite and you've got the capital and you're doing really well, then you could entertain that, but just again understand the positioning, the risk, the pattern separation, the patterns that haven't really shown their hand just yet. And yeah. So we'll go into the next one. GBP yen, again, it's corrective. It's messing about right now. It's squeezing. It is looking like a long, but I'm not looking to get in anything on this just yet. I was looking to see if this develops into a larger flag through that high to then move higher. Again, right now, listen, I'll be honest with you, it's looking a bit like a pennant, in the sense that, you know, it's doing something like this and it's kind of coming in like that. I just, again, I'm not feeling it, man. It's one of them pairs where it just messes about, does this, comes low, and then next thing you know, it's ready to go. And then you're thinking, okay, where was the structure? Is it there? Is it like this? Okay, so that was the structure. Okay, so then you're thinking, well, I was waiting for that low, this low. You know, we'll deal with it when price really starts to show its hand. And if something like that popped up, yeah, we wouldn't really hesitate on taking the long, but then we've got a near miss to the low as well. So if that failed and continued and it became more of a V shape, there's so many things that you can't just sit here and just forecast all this stuff. You can understand it as a part of your strategy, but you can't just sit there and speculate on something that's way ahead of time, because it's impossible for you to mitigate against everything. Something random can happen, and next thing you know, price is all the way up here, and then you've wasted all your time and energy trying to figure out what's going to happen over here, where in fact none of that happened. What happened was market opened up and now price is up here. What do I do when price gets up here, right? Well, you just wait and then you get involved, and that's it, done, finished, right? If price just sold off and it's all the way down here, then okay, great, I'll wait, and then I'll understand that if I got something like that, great, I'll get involved. Simple. Keep it so simple. Don't spend too much time trying to over forecast. You can sit with a piece of paper, a blank screen, and then you can just draw all the variables and value areas and how you can mitigate against it and your confluences. Once you have your plan in place, that's the thing that's going to guide you, and you just know that, okay, cool, I have two lines, I have a line here, I have a line here. I'm not looking for anything in between it, I'm looking for anything above. It gives me that, great. If anything breaks below, great, cool. What's left? Okay, it's there, so I need to be able to manage it into that, or it has to be below it or through it, etc. So you have all that criteria in place, and that will help you and protect you from taking unnecessary losses. GBP US dollar, again, this is very similar to Euro US dollar, but the nice thing about this is that we do have some sort of ending structures coming into play, but I just don't truly think that we're looking at I can't really speculate on this, but I don't think this is a short. I think this is still a long. I just think that it might store a little bit longer than we think. Going to the 4 hour, so if I go back over here, if we go to the 4 hour, what we can see over here is that we have this sort of 1, 2, 3, And then from that 1, 2, 3, what we're then seeing is that it's still within this corrective channel, as we saw with Aussie US dollar. We did have this one structure here pushed up, and now we're getting more of an ascending. Nice thing about this is that it's really going to show its hand. So how I'm looking at it is two ways, and I'll just go to the 1 hour. We either push up, this becomes a 1, 2, 3, but then I want to then see how it responds. If we get a sharp rejection, comes back down, and we get continuation here that isn't sitting on this low, it's manageable. So ideally it would probably be around about here. I could then manage it into that low and then play it for the bigger move. So I've got at least 2.3 into that, I've got about 4.4, and then if the floodgates open, great, cool. I can manage it, I can do whatever I want if the trade's good from that perspective. The other perspective I'm looking at is we don't get that, and what we do end up seeing is that price gets this area and then starts to become corrective. This is high risk, this is much higher risk, but it makes sense that this is just accumulating volume, it's failing, and then it wasn't a failed continuation. We pushed up insurance entry and I can take it back into the high and then understand that this could just be a part of another expanding, and then it's a final structure, and then I'll be more aggressive on a trade like that to understand that this could then potentially come into the override section where I've got 1.1, I'll take a break even, and then I'll probably get positioned for the short if that ends up being the trade. So that's more on the higher risk, because you see you have to do a lot more things to then you have to take a break even to then understand that it's a short, whereas you can get in for the long, manage it, and then potentially see it as, okay, right, so my trade thesis was correct and I can get away with it. Or in an unfortunate circumstance, you might take a loss. So can I afford that? Again, what I do like about this is I'm going to be looking for structure, deliberacy, and just a lot of little things within it that are going to support my trade idea, then I can manage it. So we'll see how that plays out. GBP New Zealand. I'll be honest with you, GBP New Zealand's not the worst pair in the world, but I'll be honest with you, just like Euro New Zealand, man, you know, right now it's interesting because like we got that sort of left shoulder, right shoulder, big accumulation. We had the value area low, we tapped into it, we broke it, we came in correctively. It's like, okay, so what is price doing? Why is it not continuing? Why is it not moving? What does price need to do? Well, you might be asking yourself, well, what about that? You know, you're not wrong, but at the same time, it's like, well, okay, if it did this and came back down and gave you this, sure, you could play that as a trade thesis, but then when you zoom out and look at it, you have to then understand that, okay, so we're not really responding in a normal way. This is kind of like a middle section right now. This is then becoming a little bit more evolved. Is this potentially coming back up one more time to then sell off? And is that the run that I'm really interested in? For me, that's what I'm really looking at. So I'm not seeing it as the V shape right now. I'm not trying to look at that for the trade. I'm actually trying to be patient to see that, is this going to be, you know, something like that, ends up moving, comes into these areas, and then sells off, and then we get the trades, and then that's the run, guys. That is the run that I'm looking for. This one over there, that run there. So, and then if I zoom out quickly to the daily, you can then see that it would make sense for that to then commit, but then at the same time, you know, we're in all of this, so I'm not putting too much weight, and it's not like the trade I'm waiting for, because I understand that situationally, position-wise, all of those things, it's just not the one, man. It's not the best trade in the world. It's not giving me everything I want, but it's a trade. It's a trade at the end of the day, and I'm not gonna not take it because I have some issues with the pair. I've taken losses on it. I just understand that, okay, great, if that does that, it comes down, does something deliberate enough, and that's clear as day, that meets my plan, everything is there, has a 1, 2, 3, has everything I need. Why would I not want to take a trade there to then manage it, for it to then potentially be a bigger trade in the higher time frame for me? And that's with a massive stop loss, bear in mind. Obviously, let's just say I went 50 pips for argument's sake. 6.2, managing it to 8, and then the floodgates open and it moves. You know, it goes on there. Would I be waiting for that? Probably, most probably not. I'll probably be managing 6%, I'll be out of the market, probably 5% time, I'll be out of the market. But again, the trade's there. If it drops off sharp and it's just really rallying like that, then I might just trail it on the 4 hour or the daily or something, and just wait. But I know that this pair can be messy. It can have odd price action at times as well. So we'd have to evaluate it where and when. Going to the next one, New Zealand CAD. I like New Zealand CAD, I'll be honest with you as well. Do you know why I like it? Because we've actually done something quite significant here where even though there's that near miss gap, we've really moved away quite sharp from this. But I don't believe that price is just going to respond bang on from that point. I have a very good idea that two things are probably going to happen. Price is probably going to accumulate here and then probably just do this and just really mess with people. Everyone starts to think it's going short, and then all of a sudden price just starts making its way back up. And then when we're in these areas, that's when I'm going to be taking advantage. I want to be getting involved. When we start breaking whatever mess gets created in these areas, I don't care about any of that. I want to be getting involved here because I've got a clear run back into those areas. And then what I'm really looking at here is quite a good move when you think about it. That's a big phase one, that's a phase two. And then in theory, if this is the move to go, this is not going to be stopping, man. This is going to be going back up to these areas. It could even go further. It could do a lot of things. Look at that momentum there at that point. I'm not trying to say that we're going to be getting the exact same thing, but you can see why you wouldn't want to sleep on a pair like that, because it might take a long time, but sometimes for good reason. So all of this, we can take advantage of all of that without having to get caught in and out of small trades. We can just wait. Significant price action does this, comes back up, does what it needs to, and you might even catch a few trades on the way up. Who knows? Again, I love that. I love that a lot, because in context, you could argue that, oh, but you know, what's that? Is it going to come back up? Do this? Yeah, sure, that can happen. But I think it's very unlikely because of all of that. All of that accumulation is not giving it enough reason to be messing about. It's very unlikely, let's say. So something like this would be nice, even if that was positions here. Still, there's a lot of advantages to a trade like that. So again, you can see we're right now in about middle of July. You know, middle of June. This could be coming towards the end of June, but we don't know. It could come in sooner. So a pair like that, you want to sleep on it. I'll be keeping an eye on this one, but there's no rush for me to have it on watch because it needs time to develop. It needs to show me what it needs to show me. You know, a pair like this, again, something like that. It's broken the low here, it's showing significant move. It's giving you this. You know, you could get involved even if you took that as a reduced risk. I mean, that's a massive stop loss. You can still get away with it because you're basically playing the bet of that, and then you're getting the accumulation here, and you're seeing that price is now failing, and then boom, price just goes. So again, repeatable price action, very nice price action, easy way to make money, guys. I'm joking, it's not easy. It's actually a lot more difficult than you think. The difficult part isn't actually taking the trades. The difficult part is being able to identify the trades well enough, being very, very sharp. But then when the trades do shape up, you know when to take advantage and when to actually just take a step back and be like, you know what, I'm happier to preserve my capital in this situation than have to jump into something. Now, this was a much more higher risk trade. It was a shadow trade as well. And again, I'm not looking for a pair on this one right now, but I want to just show you the trade that I was looking at. So again, New Zealand Swiss, it's a pair that, I'll be honest with you, I don't really resonate with a lot, but again, when it's ready, and you can take advantage of it. You just need to be able to identify when it's moving into these phases. You can take advantage of them because they do give you entries. In fact, if you go off and study New Zealand Swiss, you can see that after it's basically done what it needs to do in the corrective part, the sequence on the way down almost always gives you an insurance entry, but you need to be patient and sharp enough to wait for it. And the nice thing about it is it will accumulate on the 4 hour, so you'd have more than enough time to see it, but you would be able to identify and refine it as well, so you'd be able to get a much more precise entry. So what we can see here is that, again, you've got, this is the top of this overall range. We understand that this isn't always necessary to tap into because we could, and I think this is a great sign that we probably will eventually come back. and take that out at some point, but right now it's not necessary. Shorts are phenomenal on this pair, by the way. So what we can see here is we tapped in, we took out that high, we actually had a structure within there from a pattern separation perspective. We had this, took out this high, then sold off. There was actually trades within here, but we don't need to identify them right now. And then we had a sort of correction there, which then took out this, and then sold off, and then tapped into these lows. Great, that was all one piece of its own. Okay, then what we did see after was, after we had all of that complete, it left this high here, came down. We didn't know at all what was going on. We then had that piece of price action, which was its own structure, which then came down, took out the middle section lows. That was the middle low over here, and then it just correctively squeezed back up. If you then had too much drawn on your chart, you'd miss that. So that's why another benefit of just cleaning your charts. But another thing is, when you do pattern separate it, what do you have? Well, you had a larger correction into a larger correction, which is not signaling that price is being able to move higher. In fact, it's actually showing you that price is stalling and moving sideways. Now, because price action is moving sideways doesn't always necessarily mean that you can't take advantage of the market. It's just you have to be sharper and understand the market is moving sideways, so it might not move the normal way, but you have to be better with pattern separation, because when the market's moving sideways, because I actually began to learn trading with Falcon whilst the market was moving sideways, I got very good at it. But then when the market conditions got a bit impulsive, I struggled because things were moving so quick. I had to learn to adapt very fast, and without good mentorship, it was the guidance that I had was phenomenal, and I'm a true advocate of giving credit where credit is due. And I think at the end of the day, like, without that, man, I would have been taking impulsive trades. I'd see the market drop like this, and I'll take a trade there, and the market would come, maybe tag me out, come back down. I'll be like, oh my god, take another trade, does it again, and next thing you know, I've taken so many losses, and the market's just plummeted. But I've done it aggressively in the wrong way. So it's always good to, and that's not the way I want to be trading, man. I'll be honest with you, it's emotional, man. It's very emotional. But yeah, sure, you can make some money, but at what cost? And that's something you have to always realize is the cost is your mental health. It's not worth it. So let's check this out quickly. So as you can see here, we had the 1, 2, 3. You'd argue that you're not taking any trade here, because even though you have internal structures, whatever, and it could be a part of anything, you'd wait. So then price broke the line in the sand, as I mentioned at the beginning of the video. If you haven't watched it, go back and listen to the beginning again. You then had that, and I was like, okay, well, even if this develops into something larger, I'm still protected to take the break even, and then wait for it to come up here, do what it needs to, come back, give me another trade, and I'll go short again. Great. The reason why I didn't want to take it on my trading account, and I just wanted to shadow it, is because there was much better trades. Now, arguably, sometimes that works in your benefit and sometimes it doesn't, and I think proper filtration is something very important for all traders. Sometimes we get it wrong, sometimes we get it correct. It doesn't really matter. At the end of the day, we're able to make money, which is the most important thing. So again, what we can see here is that I'm on the 1 hour. Price came back, retested it, left this little bit of correction, came back, scooped up, tapped in, then gave me a confirmation candle. I wanted to use the 15-minute just to reference it and see what's happening, and I could see clear full body price action. I was really happy with that. I even went to the 5-minute just to see what was happening on the lower time frame. And there was something really interesting about this, is it even did have a, a little bit of a correction right there. So I was kind of then thinking, okay, well, if this does develop on the 15-minute or whatever, and it does come back up, and it does something, it could be there. So I want to be protected to survive that, but also I don't want to be in the market for it to do this, spike up a bit and then sell off, and then I've taken an unnecessary loss, because again, New Zealand Swiss isn't my go-to trading pair. So at that point there, you can see I took the trade, and again, just like Aussie CAD, I walked away, and I didn't bother just monitoring the chart so aggressively. I came back and looked at it when price was roughly around about here. It plummeted, and then my trading alert went off on my phone, and then I was like, okay, great, well, trade is here, it's full body price action. What I'll do is I'll lock in 50%, because if it does come back up, I don't want to be back at break even for no reason. It's just a trade. So it was running about it was roughly about 2% on my original shadow trade. And then I locked it in around about % over there, and I was like, all right, cool. Well, if that for whatever reason comes back up and tags me, it is what it is, man. I'm more than happy with that. And then the next candle just completely plummeted. And then you can see how 2% trade with 1% locked in actually ended up becoming a 6.5% trade within a candle. Now, does this happen every day? Probably not. But I remember saying to my friend, like, exactly, I was just out of the market, 6.5, candle closed, and that was that. Because when you zoom out, you can see to the left, it was at a significant point where, as I mentioned before, this is an area where we can get a pullback. So for that reason, I don't want to be jumping in charts and holding on to that. Next one is New Zealand US dollar. Again, you can see contained within this area, within this squeeze. I'm not looking to take anything at all on this now. You could argue that you're waiting for that and you get something like this, you could take it. Yeah, sure, man, go for it. I don't see anything wrong with that. It's just, again, I'm not looking for that unnecessary trade. I think this again, still could be a nice trade. It could develop, become expanding, become part of this, and then it just keeps expanding and moving higher. Great. I just think I have much better pairs that I'd rather focus on, and within this overall sequence, like Aussie US dollar, it's just going to be a tricky one, to be honest, and keep evolving and stuff. I would much rather wait for something a lot more clear and significant. Yeah, I think overall, when you do look at it, and I'll just quickly go here, it's, even though it's priced at this point here, I wouldn't let that put you off. We are still looking at longs. What we can also see is that this was one piece of its own. So as we can see, okay, so we had that section there. We can then see that overall down here we created a base. See, we took out all that liquidity, we then came up strong, that's where all the bigger players stepped in. There's a base there, but then that was one piece of its own. As we pushed up, we can then see it left a base there, but then it kind of just squeezed higher, and now we're just contained within this section here. Anything above here, I'm all for. Anything below here, I'm all for. Anything down here, I'm all for. And anything down there, I'm all for. I just don't want to be trading within that. Personal preference, just emotional, all these things. There's, like I said, I could opt in for GU or something. I don't have to go for NU, even if it's giving me something in there. And at the end of the day, it's that level of just accepting. If something shaped up, I've happily decided that I'm going to walk away from that. So next one is New Zealand yen. As we come to the end of the forex pairs, I'm not going to go into commodities and indices just because the video is just going to go on. But I don't have any commodities and indices on watch. I was eyeing up oil though. Oil was looking good. So over here we can see that, price is squeezing into this area here. It tapped into it. It then sold off. And now if we just go into the 1 hour, what we could see here is that there was actually a trade here, which was there. And the reason why I would have taken this trade is because not only do we take up high, but I'd be paying this as a isolated piece of its own. So I'd be looking at that as continuation to the upside. And then I would basically be looking at taking the trade in here. If there was an entry, I don't know if there was actually, I haven't even seen it. And then I'll take it into that section there and then just manage it aggressively. And then if it plummeted, it did, then I could manage it into probably that section there. Just quickly go to the 15. Yeah, absolutely. So you can see even here there was a bit of that squeeze. It was there, took out that high there. I could have easily just probably taken a reduced risk. Probably, knowing me, I probably would have gotten a bit sooner. I probably would have mitigated against this. Probably gone about 23. And then to the low there, I've got about 1.5. At this point here, you'd be running 1.2, so I'd have about break even locked in, and then price would push down, come back up, and then sold off. And then when price started breaking into these areas, running about 4-ish%. I suppose if I looked left, yeah, I think at that point there, I'd be running 4. So then if it pulled back to about 2, you'd probably, it's possible I would have probably walked away with around about this area. I probably would have either walked away with 2.3 around about here, or maybe even around about 2%, or I would have just probably locked out around about 4.3. But again, that's because of that low there. But it's easy to see that low now because of how it's responded, but in the moment I don't know if I would have put too much significance on that particular low. And I think I would have really just walked away with that 2 point something here, and that would have been the trade. It's you know, again, it's one of those things where it's hard to talk in speculation of hindsight because we can see what's happened. So I can just literally say anything, and it's not backed by live market experience. So just keeping that in mind. Continuation now. I don't think there's any trade, man. I wouldn't even touch this pair. I'll just leave it. Like, it is what it is. If it gave you something so significant, then you could take it, but price action's a bit rubbish for me. USD CAD, you know, I like USD CAD. If I get something like this, it is moving to the downside. I like it. There was that push, tapped into this, push down. Did we get any entries on the way down? Yeah, we can see that there was that bit of a squeeze. Wasn't the easiest one. Probably would not have taken a trade. Then we had this failed continuation, push down. Then we came here, and now we're here. I think if we got that in insurance entry, great. You know, there could be a trade there. It's just we're playing with a bit of a risk because the reason being is you can see it correctively moved, scooped up, tapped into that area, sold off. Didn't get the best entry, sold off. Came up, and now we've basically broken all of that section there. We're trading through it at the low, but this is more for a reason why this could just probably turn into something. I don't know, actually, really. I don't think it's going to do that. I think this could be a solid trade, actually, to be honest. Now I'm kind of thinking over it. I think that was one piece of its own, just wasn't clean at all. Separate that. Price left a bit of a hook point there. So the odds are it either doesn't come back up here because it's unnecessary, it's quite far. It broke the low here and then created this as a significant point. It does something quite similar, which we saw over here. It's happening over here, and then price just comes back up as we saw in the previous structure over there, which we're seeing over here, and then it takes it out. The reason why I think that is because actually we have the near miss there and we have the near miss here. So the only way I can really see that is I'm not going to be taking something over here because that can become larger and continue. I will wait till that fails and gives me a continuation there and goes. And I think if that was the situation, that's how I'd be taking it. If we responded sharply and it was clear enough, I would take it. You can see here how price did respond, give you that little bit of price action, but you can see how that's a trap because when you look left, it was basically sitting on something as well equally there, but it wasn't really fully developed. It was kind of just, it was kind of just a bit like that. So I think for that reason as well, and didn't even give a confirmation candle as well. So for those reasons, I think if that developed and did something like that, then sure, I mean, it comes with a bit of risk because it's still within that low. So you'd have to accept that as a variable. But if that was, even larger like that, that'd be perfect. But I wouldn't hesitate on that because it has context. Again, it's one of those things that can just save you a lot of money. So this is basically it. And I understand that if it does go higher and it comes up to that point there, then I probably wouldn't even take the trade, I'll be honest with you. Not because it's not a great trade, I'd wait for it to respond, wait for it to come back down, and then just really start giving proper entries like that, and I'd be looking for probably that and that, opposed to something there. Because it's quite close to the high there. What reason does it have not to do that, right? To come all the way back up here, to then do that, and then you zoom out and look at it on the daily, and then you're like, okay, hang on a second, that makes sense, right? That's a larger expanding. It was always a larger expanding, it's just very irregular, and again, so all of these things in place. And then let's go into the last two pairs. So USD Swiss, again, USD Swiss, it's a great pair, man. Honestly, I'm not gonna say anything bad about it. It's just right now where it's at, it needs development. It's the first thing that comes to mind because we're basically range bound in there. We don't know what's happening. This could still develop. This could sell off, become like that, even continue, and then it comes up, does this, and it turns into something really messy. This could become any structure, and I think when you have a pair like that, which can literally become anything, like you can draw it on in 100 different ways, it's just not worth it, man. I'd really wait on it. I'd wait for the DXY to show its hand and then take advantage of it. And UJ, I think again, UJ is one of them ones right now where you can argue there's some sort of trades going on, but look where it's positioned, man, as well. It's like, it's in the middle of all of that. Like up here, great. Trade there, great. Okay, pretty decent, can still manage those. But now that we made a sharp pullback, sharp sell-off, failed to continue, failed continuation, squeezed up 1, 2, 3 ascending channel, didn't quite get back to those areas, sold off sharp, pulled back sharp. You know, typical price action in the middle of the structure, man. There's no point me messing with that. Let it do its thing. If it comes all the way back up here, get a trade there. That's okay, man. That would be something I'll be more interested in to see if we got momentum coming to the market, because at least it's coming from somewhere with a little bit more context to it. And again, that's why more patience is involved. But I'll be waiting for that, man. Like, I'll zoom out on the 4 hour quickly and you just see it a bit closer. You can see that's great, man. You've got push down. Even if you measure that from here to here, and then I pull that over there, yeah, man, that's, you know, why would I hesitate on that, right? That's solid, really. If the trade like that sequence there, great, but overall structure makeup, not so great. So I'd wait for maybe second continuation on this, maybe third continuation, and let it really show its hand, be supported by so many. There's just a lot. I'm asking for quite a lot on this. So again, it's I'm not gonna be looking to put this on watch yet. I want to see some significant price action without having to go to lower time frames to find it. I want to be looking at on the daily. Yeah, cool. On the daily, I can see we're still at this low area. So maybe even so at that point there, yeah, who knows, man. Let's not jump into a trade unnecessarily. Let's just be patient and wait for a great trade. That's what I'm saying to myself with this one. I don't see any reason for me to just start jotting all this stuff on. I think really and truly, you know, if I'm looking at this, I don't want to be messing about with that too much. If I'm going to be trying to zoom in to the 1 hour, you know, where I'm going to be looking to take a trade is maybe you got something like that, you responded and you came down and you got a trade down here. Yeah, great. I could do that. And then I think even if I went to the 4 hour daily, you'd basically be able to read it and understand it. It didn't show up, but anyway, clearing those sections there. You can see it's in the middle as well, further in the run, so it can mess about. I want to see it kind of just basically playing off the bat of that, and then even a trade here could be interesting, where you're basically playing that and that. It's basically cleared all of that. It's now through that. You've got a clear run to the low. That makes sense. Anything in these areas is it's difficult, man, and yeah, you be asking for trouble and stress, and I've been through that. I don't want that. That's one of the reasons why I probably won't put this one on watch. So guys, I think that's a long one. So I hope there was a lot of value in this video. I know I went on quite a bit. And yeah, if you have any questions, drop them in the comments below. Definitely, I think there was a lot of valuable lessons in this as well. Good insights on how I'm thinking and seeing the markets as well. And how I'm staying out of the markets, which is more important. So guys, have a great week ahead. I hope you found a lot of value in this video, and I'll catch you guys in the next one.